Hey traders, this is Ron Haidt at Market Tamer. Happy Monday. Hope you guys are having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Kick off here with the S&P 500 ETF, the Spiders, down 21 cents today, just barely above its 20-day EMA. So the bulls are still getting the edge, looking out 20 days, if you will. But if we get below that red line, we want to target the 50-day in orange and the 200-day in purple, both SMAs, both institutional moving averages. They also tie in with that little swing low back on March 8th earlier this month, makes for a nice little confluence. Man, we get below that, that opens up the door for something more serious on a technical level. If we go to the Qs, they're holding up the best. Only lost 34 cents today, below its 5-day in blue, but still above the red line, which is the 20-day. Now, the Dow did bounce a little bit today, but its downside target here is still going to be the 50-day, which also coincides with the low here from 38311, which is a Friday, Monday situation. We get below the orange line, then you go purple below the purple. That would be a sign of concern. And then the IWM, which is the Russell 2000, still sort of tracing out this inverted head and shoulders pattern. But if I zoom in here, you can see it tagged the 50-day SMA in orange, the underbelly, the underside of it. Couldn't get above it. This is still bearish. Overall, yellow flags, caution is absolutely warranted, but the bulls still get more of an edge than they don't. It's not super bullish, but we're still bullish when you look at the Spiders and the Qs. Dow neutral, IWM, MDY, flat out bearish right now. Okay, I got requests for a second chance. So this Wednesday, noon and 8 p.m. Eastern, this is what I want to show you. This is the line of what the stock has done. This is what the future probabilistic price would be according to Financial, which is using the stock's own historical data as its secret weapon, which now can be your secret weapon. But check this out. This particular stock, you can see how it rises, flatlines, and then rises again. If you knew when the pockets of time when these stocks rise 70, 75+% of the time, or others rise even more, could you imagine how selective it could potentially be with trading? Bullish here, sidestep, go find something else, and then bullish here. Otherwise known as sector rotation, otherwise known as seasonality. This is the information you've got to see for yourself. So, one more time, last week on Thursday, we filled up the noon and the 8 p.m. sessions. Folks got locked out. I'm going to do another twofer. I've never done two twofers, so this is the first time for this. Get in. There's a link at the bottom of the email, or if you're watching this on YouTube, at the bottom of the video. Please register ASAP. A third of the seats already gone for both, and I've only sent out one email. There will not be a replay, so you got to be there to see it. I will show you the hottest stocks for the weeks ahead. All right, next, let's take a look at EDU, which is a seasonally bullish stock. You can see how this stock has come down, it's been rallying, and it's consolidating. Today, the stock jumped 4% on Monday, and it's almost about to take out these previous highs. There's even a little bit of a pickup in volume. A lot of folks are going to look at this, and maybe it's going sideways. But we knew coming in, even in January and February, this is a bullish time of year for the stock. It's already moved up. The upside target's going to be all the way up here. EDU is going to be one of those stocks we're going to talk about on Wednesday. If I haven't said it yet, register ASAP. Home Depot, another bullish seasonal stock. This one also starting to ramp. Takes out these previous highs. Guess what? Up there is the target at 210. This one rises as much as 75% of the time historically over the coming weeks. This is priceless information. Apple. There was news today that Apple is going to compete with Netflix, but pretty much everybody knew that already. If you're following the stock closely, the stock was down $2, 1%. As long as it stays above the red line, the 20-day EMA, it would be viewed as technically bullish. Right now, it's just playing back and forth with 200-day in purple, but nothing really structurally wrong with the technical trend right now. Netflix is actually up on the day, 1.5%. I would still consider either a red or the orange line is trailing stops right now. It was below the red line here a little bit ago, but then it got back above. I think if it gets below 50, I would have to just cut it. You know, if I wanted to still be bullish on it, that would be my line in the sand, the 50-day SMA in orange. And I had a question about reviewing some ETFs real quick. The banks have rolled over. They're not doing well. Their downside target's all the way down here. There's a little bit of a gap fill, just about 24.75. And the transports, they finished a little bit lower today too. They're still holding, man, actually not even holding, they technically broke it a little bit. That low here, there's a lot of volume today. If we get another big down day, man, 155 would be the target. And here are the semis, SMH, It did hold the 20-day EMA in red today. If it gets below there, target would be that cluster right around 98 to 100, which is the 200-day in purple, 50-day in orange. So there you have it. Make sure to register for the next Q4 event. This is going to be it. So register ASAP, and I look forward to seeing you there. Have a great day.